Hello, here we have the key differences between cash and profit. So, definition cash is physical money available to a business, including cash in hand and at the bank. And profit is the financial gain or loss of a business that it makes over a period of time. So, basically, it's a revenue minus expenses. Measurement basis cash, actual cash inflows and outflows, irrespective of when income is earned or expenses are incurred. Profit is based on accrual accounting, recognizing income when earned and expenses when incurred. Timing cash, recorded when cash is received or paid. Profit, recorded when transactions occur, regardless of the cash movement. Impact of credit, credit sales and purchases do not immediately affect cash, whereas in profit, credit transactions impact profit as they are recognized at the time of sale or expense. Non-cash items. Cash excludes non-cash expenses like depreciation or amortization, whereas profit, it includes non-cash expenses and income, for example, depreciation and accruals. Purpose. Cash assesses liquidity and ability to meet short-term obligations, whereas profit, it measures financial performance over a specific period. Importance. Cash, it is vital for day-to-day operations and solvency, and profit is essential for evaluating long-term viability and profitability. Statement source. Cash is derived from the cash flow statement, and profit is derived from the income statement. Overdrafts and loans. Cash. Borrowings provide cash but do not increase profit, whereas profit is interest on borrowing. With profit, there's interest on borrowings, which reduces the profit but does not immediately reduce cash.